Hello and welcome to Dialogue. China's gross domestic product grew 5.2% year-on-year in 2023, hitting the government's around 5% target. Still, the world's second largest economy is facing multiple headwinds in the early going of 2024. So how has China's economy started off the new year? What can we expect out of the Chinese economy in 2024? Join us for our discussion today, live from Beijing. I'm Xu Qinduo. Joining me today are Hong Hao, Chief Economist of the Grow Investment Group, He Weiwen, Senior Fellow from the Center for China and Globalization, and Dr. William Li, Chief Economist at the Milken Institute. Welcome to Dialogue. So Hong Hao, I will start with you. For those who are not following the Chinese economic so closely, how do you characterize the current status of the world's second largest economy?
Yeah, well, I think the economy on the surface is trying to recover, from the pandemic era of, very slow growth. I think the economy is trying to find a bottom right now. I think this time around in this economic cycle, the time is spending, hovering around the bottom has been longer than usual. But I think last year, 5.2% GDP growth is a reasonable number, considering how much challenge that we have to confront last year. So I would say that overall it's a good result.
Mm-hmm. So, Mr. He, do you agree? So now we are seeing probably the economy has stabilized and it is going to grow probably even stronger than last year?
Oh, yes, I quite agree with Dr. Hong. I think now China's economy is still in the process of slow recovery to the trend line. Because although we hit 5.2% GDP growth last year, it was on a low base of 3% growth in 2022. So the two-year average was still 4.1%. It's not back to trend line. We have to overcome a number of difficulties. The inadequate demand over excess capacity and poor, weak anticipation, and also troubles in the property market, and also in the difficulties in export. So we have to overcome those difficulties before we can bring back our economy to the trend line.
Mm-hmm. So William, what about those, basically, Mr. He mentioned multiple the headwinds, for the economy in 2024. What about the prospects of overcoming those challenges?
Well, the policies are in place, and I think the policymakers have done a good job of trying to stimulate the economy. The headwinds that we're really worried about, at least from the Western perspective, is the private sector. Much of the growth from last year came from fiscal stimulus in the government sector, and also it's on the supply side. Many of the reforms are aimed at making China more efficient and bringing China closer and beyond the frontiers. But the key for us in the West, when we analyze China, is whether domestic consumption is going to be able to overcome the drag from the property sector and other job uncertainties that we are witnessing right now. So I think all in all, policies are in place. I think the government is doing the best they can, probably can do a little bit more. But I think overall, we're anticipating a better recovery and a better composition to the recovery, a stronger recovery.
A better composition. Speak of this consumption, last year, according to reports, the consumption accounted for 82.5% of the total GDP. So Hong Hao, are we expecting this figure to continue to be consolidated, or do we have concerns about whether there's a lack of confidence, for example, for the growth of consumption?
Yeah, I think consumption has been rather resilient, considering how much challenge that we're facing last year. But having said that, though, as you can see, there's quite a bit of consumption downgrade here, right? So even though the volume is up, but the average price per order is actually down. I think in 2024, if the growth is still around 5%, or maybe not even that, because next year in 24, we're still facing multiple headwinds and we have to overcome many challenges. And so if income is not going stabilize fast enough, then it would definitely affect confidence, consumer confidence, and also consumption patterns. So I think right now, the base case for us really is that, consumption is steady as she goes. It may not be surprise on the upside, but then at the same time, it probably, extend the trend that we've seen in 2023.
Mm-hmm. Mr. He, what policies or, what are the, incentives or policies to try to stabilize consumption or to encourage, consumers to spend in the new year?
Oh, yes. I think when we start the year 2024, there was a general optimistic mood among the different provinces and across the country, because based on the 5.2% growth last year, the provinces are ready to hit the same growth rate, about 5% this year. It is good. Still, we have many challenges. We have to overcome those challenges before we can hit that goal.
Mm-hmm. Speak of that, of course, you do see sometimes, mixed numbers or mixed even messages over there. William, you mentioned earlier, like this private sector. We do have this manufacturing, purchasing managers index or PMI from Caixin, which is often used to measure this private sector. That was 50.8 in January. Basically, it is in the expansionary territory. That's of course that's good. But at the same time, you have this sort of like a contrasting message here. The official purchasing managers index, PMI, rose to 49.2% in January from previously 49 in December. So that's still a tick upward, but it's lower than 50. The separation of expansion or contraction. What do you make of these numbers?
Well, one of the things I think we have to be very careful about is to read too much into little wiggles. I think the overall expansion that China's been used to is to have these numbers in the 60s and 70s, right? So I think the space that ahead is really quite far to go. And yes, it's optimistic that it's not getting worse. But I think the policies that are in place now really have to focus on the demand side. Many of the policies that have been put in place, as I said earlier, is that really boost the supply side. And we already have China's known to have way too much capacity on that supply side. Now, it's good to get rid of some of the old capacity that's inefficient and replace it with better capacity. But in doing so, it also creates job insecurity for those who are working in those older processes. So the demand side really is the focus. And I think the policies now have to focus much more on income stability and wealth stability. So wealth stability being primarily the property sector. So I think that's the new focus, I hope, for 2024 fiscal policy.
Mm-hmm. Mr. He, some say the Caixin survey, offered hope that external demand may improve with new export orders increasing for the first time, actually, since June last year, in months, I would say. Of course, this increase is marginal, just as William mentioned. It is just a small changes. So, do you agree that you do see probably, can we be a little bit more optimistic? There's, growing demand from external markets?
Yes, of course, this is encouraged that we have seen an initial signs of the rebound in export order and export performances in the final quarter of 2023. Still, it's too early to say that it is a definite upturn or it is only a temporary phenomenon. In the main, we still see very difficult situation facing our export sector, because if we judge the 2023 whole year performances, we can see a clear downward side in traditional labor-intensive sectors, and also in the clear downside in our export to the developed countries. So we have to work hard to bring it to the rebound before we can say that the export is going up.
Indeed, Chinese exports in 2023, to major partners like ASEAN, that fell by 5%, to the EU, fell by 10%. Of course, the export to Russia registered a strong growth of nearly 47%. If you look at it sector by sector, Hong Hao, you do see, in some sectors, you do see strong growth. For example, EVs, and also, what do you call it, for the Shein and Temu, the directed to consumers, parcels, you register like a 69% growth. Is that something, offers new hope for the Chinese manufacturing sector?
Yeah, well, I think we're seeing, very strong growth in the sectors that you mentioned, especially, the Chinese internet merchants going overseas to export the Chinese business models to many of the other overseas countries and become initially quite successful. And also EV is taking market share in the US and also in the European Union countries. Now, the problem, with that is, or the danger with that is that, because, you're taking market share and cutting other people's lunch, right? So it tends to invite sort of a retaliation, a trade retaliation from those countries. For example, in the US already, the Biden government is stopping government subsidy, for EVs with Chinese batteries. And I think in the EU, because the Chinese EV makers, they are taking market share from the traditional German luxury car manufacturers, for example, BMW and Mercedes. And I wouldn't be surprised to see, going into 2024, there will be some sort of trade sanction against some of the EV brands that we're exporting. And also in Southeast Asia, we're seeing Temu and other internet platforms exporting Chinese business models over there. The online stores are taking huge business from the offline stores. So the Indonesian government sort of, sanctioned the online presence of some of the Chinese online retailers as well. So, it's good in a sense that, the Chinese are exporting, and also, many of these solar panels, semiconductors, and EVs are high value-added goods. But many of these goods, they are cheaper, because they are receiving government subsidies. And so as a result, it tends to invite sort of a trade retaliation from those countries that we're exporting to. So I think for now, it is supporting the export business for China, but then at the same time, one has to be aware of the danger, mindful of the danger that, it could somehow backfire somewhere down the line.
Mm-hmm. Well, on that front, William, what can they do, to reduce the risk of, let's say, tariffs or investigation or retaliation, from other markets, for example, for the Chinese EVs?
Well, the EV market is something where China really has done superb progress in engineering and tried to produce probably some of the best cars in the world. And in fact, I think one of the things that we should keep in mind is when, as Hong Hao talked about retaliation, it's retaliation because the concern is that there's a job loss in the part of the EU and also competition in terms of parts in the United States. One thing to do is to have investments, joint investments. I think one of the things that China hasn't exploited enough is the possibility of doing joint ventures with their partner countries and to be able to share the kind of production efficiencies that China's experiencing with production in other parts of the world, mainly putting into those countries some of the more efficient factories that you now have in China.
Chinese investment in the EU, for example. On the other major sector, Hong Hao, back to you here, of course, we see restrictions being lifted, basically, or, somehow now they are in the hands of the individual cities to make a decision in terms of the property sector. Guangzhou, Fuzhou, for example, southern Chinese cities, they are lifting all the restrictions. So other cities may follow. What is the prospect? What kind of a role it will play? Are we going to see in the property sector, it's returning to normal, or this year it will perform better than last year?
Yeah, I think I wouldn't be surprised to see other cities follow suit as well. I think major cities such as Shanghai gradually relaxing many of the curbs to buy properties. Guangzhou has relaxed, buying an apartment above 120 square meters, anyone can buy it. Suzhou completely relaxed all the curbs. So I wouldn't be surprised to see other major cities follow suit. But having said that, I think all the restrictions at this stage, all the restrictions should be removed. In the sense that in 2023, if you look at the total sales figure, right? So we sold at about 10 to 11 trillion yuan worth of property, which is like almost 50% of the peak in 2021 when we sold 18 trillion yuan worth of property. I think a sustainable level, at the current stage is probably annual sales of 8 trillion yuan or around that. Then so even with a substantially less sales last year we registered, we're still somehow above the sort of a sustainable level, right? So I think at this stage, if you want to really stimulate housing demand and also accelerate the urbanization process, it would pay to remove all the restrictions for people to buy. And also, last year we've introduced a number of policies, trying to stimulate housing demand. For example, we cut the mortgage rate, and also we lowered the down payment ratio, and also, we relax the second and the third home purchasing as well. But even so, you're seeing, last year, the top 100 real estate developers, the sales is down 30%, right? So it's a very challenging situation right now. So I think we have to move quickly to stem the downward pressure, to stimulate demand, and by removing all the restrictions on house purchase, I think it's one of the ways that I can see to help sustain the demand.
William, do you agree? Of course, from outside, there's a lot of attention being paid to, for example, liquidation of Evergrande. But of course, now it's shifting quickly. People are talking about individual cities lifting these curbs. So do you agree? Probably the only solution, to do it as quickly as possible, lifting all those restrictions.
Well, I think restrictions always distort markets, and I think I'm always in favor of lifting restrictions. But one of the things that we have to make sure of is that there's adequate demand for these properties. Lifting restrictions for something that nobody wants is not going to help the property market come back. So I think one of the things that Evergrande represented was bad corporate governance, and maybe some reform over the property market developers' business models is called for. People are very nervous when they hear that I have to prepay for an apartment or a flat, and then I have to wait a certain amount of time for that property to be built, but I've already paid for it. And what is the company doing with that money? And I think the fear of it becoming a Ponzi scheme and companies just running off with my money is something that prevents people from having confidence that their delivery is going to be there, and also that they can resell their properties, especially when there's so much surplus being built. So corporate governance is something that I think we need to worry about, and reforming the way that the property market is sold, and having some more regulations on what it is that companies can do with the money that they've collected from the people. And maybe more of the Western business model, which is to say property developers build the buildings and then sell those existing buildings to new customers. That would promote a lot of confidence that there it is. I can.
Yeah, there's a tech glitch there. Let's turn to Mr. He. We are talking about this, say some of the policies taken by southern cities, including Guangzhou. Mr. He, obviously, they are in the leading position in terms of introducing new policies and taking first steps to help the economy. They have put forward the target growth for 2024, 5% this year. Some of China's more indebted regions, probably they are more conservative. But overall, what about the growth target for 2024, the Chinese economy, Mr. He?
I think the general target among the provinces are 5%, and there has been a growing voice among the scholars, experts, calling for 5% for the national target for 2024. It's good if we can really hit it, because as I said previously, that this year our growth will be on a high base of 2023, 5.2% already. And the 5.2% growth last year was on a low base of 2022, which was only 3%. So it is very difficult because the 2-year average is only 4%. So on the basis of 5%, we still want to hit another 5%. That will be very hard. I cannot say that we will not hit it. We might hit it unless we should tackle the practical issues. First, the weak demand, the excess capacity and also the weak expectation, and also the property market troubles and the fiscal deficit among the local governments, and so on and so forth, especially the export sector difficulties. So we have to shoot these practical problems carefully in order to hit really 5%. We should not set a hard target, 5%. We should make it an anticipated goal instead of a compulsory goal. Then we work hard to try to get it.
Try to reach that target. Of course, it requires policy support, it requires the new reforms. Hong Hao, on Thursday, speaking at a briefing on Thursday, Chinese official from the finance ministry talked about, fiscal expenditure in 2024 will keep up the necessary intensity. Are we talking about expansionary fiscal policies here?
It remains to be seen. I think many of us were obviously hoping for expansionary fiscal policy and also easing monetary policy as well. I think in 2023, the budget deficit was like close to 3.8%, but then 1 trillion of that is done in the fourth quarter. So some of the leftover budget deficit from last year bound to be spent in the first quarter this year. And plus, after the twin sessions, there could be more announcement in terms of physical spending. So I think many of us were hoping we can really spend up in terms of fiscal policy, because monetary easing has done has gone a very long way, in a sense that last year we cut the triple R a number of times. We have lowered our interest rate. We have lowered many of the LPR, for example, et cetera, et cetera. So, monetary easing has gone a long way. But I think it's time for fiscal policy to do its job. So I think, if at this juncture, I think even 3.8 is too low. So I think we can do 5% or even 6% fiscal deficit, so that, we spend our way out of trouble, so to speak. And I think right now, just now, the other guests mentioned stimulating demand, right? So one of the hurdle for people to spend money is that, they probably don't have a very steady outlook for their income, right? So if people are not spending, if private households are not spending, then it's up to the government to spend up, to sort of, spend our way out of trouble. So I think, we're seeing early signs of, physical spending already, starting from last quarter of last year. We're just hoping that we can do much, much more than that, right? So to really stimulate the economic growth going forward.
Well, of course, domestically, and then we have this external environment. Let's say it's still uncertainty, and also with the conflicts like in Ukraine, in Gaza, in the Red Sea area. That's all. Brings up this uncertainty that also becoming challenges for many countries. Then recently, the International Monetary Fund has released a report actually raising its forecast for global economic growth in 2024 to 3.1%, 0.2 percentage points higher than its forecast in October. William, so why are we having a better perspective for 2024 globally here?
Well, we're better than we were in October. I think the IMF is much more optimistic than we were in October because the reforms for inflation have really gotten to the point where there's less of a need for monetary restraint. And I think that everyone is anticipating that the West will start to revive its economy as soon as inflation comes down to 2% and we hit our inflation targets. But for China, the most important thing that the report noted was that, in the past, global growth was 3.8 and above. That number. And so China has really done a lot to drag down world growth. And it says that the fiscal policies that are needed in China are really to change the composition of spending to be much more directed toward income support and wealth support, because that's what will allow the Chinese economy to revive strongly and efficiently. And I think one of the things that the IMF hasn't pointed to exactly, but I think one of the Western analysts have noted was that defense spending and debt payments and interest payments on the debt are the two fastest rising categories in the budget right now. And I think one of the things that the IMF has talked about is the need to reform fiscal spending to allow much more in the way of private sector support, giving more direct subsidies to income subsidies to the consumers, which is something that China has really shunned away from, really focused on the demand side, the supply side instead. And also, I think one of the things that China can do is put in a social safety net, a safety net that lets people know that if all else fails, the government is there to help support my income. If I am elderly and retired, I have income to depend on. That will do a lot to stabilize the confidence that people have to go out and spend.
Well, Mr. He, the IMF, raised also its economic growth forecast for both China and the U.S. to 4.6% and 2.1%, respectively. What do you make of these forecasts here?
I think the IMF is quite optimistic about the U.S. economy because just 1 month ago, the World Bank estimated that the U.S. economy will only grow by 1.7% in 2024. Now IMF has revised that. It is expected a much better figure than World Bank because the World Economic Outlook released by IMF was on January the 30th, after the United States announced its whole year figure for 2023, which is 2.5, pretty good. And the last quarter of 2023, it was 3.3%. So on the optimistic mood on the United States, so IMF has a quite relatively optimistic estimate on the US and on China, because also after China released the whole data, the data for the whole year of 2023, which was really 5.2%, above 5%. So IMF also was quite optimistic about China. So on that basis, IMF looked positively on the outlook of the world economic growth for this year, 3.1. So China, United States combined accounted for over 40% of total world GDP. The healthy growth of the two countries will count very heavily on the outlook of the world economy.
So Hong, can we say we are not that pessimistic about 2024 globally?
Yeah, we should remain hopeful for 2024. I think 2023 we've been through a lot. I think 2024 is a U.S. election year. The U.S. politicians tend to spend big during such a year. And also, just now we discussed the fiscal position in China. It's up to the Treasury Department, to do its job. And also, coupled with monetary easing, we can see strong support for the Chinese growth in 2024 as well. So I think all in all, if the two of the biggest country is doing okay, the European is not falling off the cliff, then I think 2024, we should be hopeful for a better year to come.
Yeah, despite all the uncertainties over there. Well, on that note, we come to the end for today's show. Many thanks to our guests. You can also find us on the CGTN app on YouTube. I'm Xu Qinduo. Thanks for being with us. See you next time.